Solar silver demand is exploding. The numbers are not gradual. They are not incremental. They are explosive. Solar panel manufacturers globally consume more silver in the last 12 months than any previous period in recorded history. And the projections for next year are higher. And the year after that, higher still. Solar silver demand is not slowing down. It is accelerating. And yet, the silver price action today is ignoring it completely. Record solar silver demand. Flat silver price action. If you have been asking why silver price is not reacting to what is happening in the solar energy sector, today we answer that completely. With data, with the actual consumption numbers, without drama. This is your solar silver demand complete breakdown. The real numbers, why price action ignores them, and exactly what happens when it finally cannot ignore them anymore. My name is Stack AG. We invest with logic, not hype. Let us get into the data. Let us start with the actual consumption data, because this is where the story becomes impossible to ignore. 5 years ago, solar panel manufacturing consumed approximately 50 million ounces of silver annually. That was already a significant number, but it was manageable relative to total global silver mine supply of approximately 800 million ounces per year. Today, solar silver demand has exceeded 200 million ounces annually. That is a 400% increase in 5 years. 400% in 5 years. To put that in context, 200 million ounces of silver consumed by solar panels alone represents approximately 25% of total annual global silver mine supply. 1/4 of everything miners dig out of the ground globally, consumed by a single industry, and this number is not plateauing. The Silver Institute projects solar silver demand will continue growing by 15 to 20% annually for the next 5 years, driven by government renewable energy mandates, driven by corporate net zero commitments, driven by falling solar panel costs, making solar economically attractive even without subsidies. The math of this growth trajectory is staggering. If solar silver demand grows at 15% annually for 5 years, it will reach approximately 400 million ounces per year, half of total annual global mine supply. Consumed by one industry, before investment demand, before jewelry, before every other industrial use. There is no historical precedent for a single demand driver consuming this proportion of a commodity's annual supply, while the commodity's price remains flat. Before we explain why price action is ignoring this, we need to understand exactly why solar panels require silver. Because this is not a story about a demand driver that technology can simply engineer away. Every solar panel manufactured today uses silver paste in its photovoltaic cells. Silver paste is applied to the silicon wafer surface in fine lines called bus bars and fingers that collect and conduct the electrical current generated when sunlight hits the silicon. Silver's unique combination of electrical conductivity and resistance to oxidation makes it irreplaceable in this application. It is not used because it is cheap. It is used because no other material performs at the same efficiency level at comparable cost when manufacturing constraints are considered. The photovoltaic industry has been actively working to reduce silver content per panel for years. They have made some progress. Average silver content per panel has declined from approximately 10 grams to approximately 6 grams over the past decade through design improvements. But here is the critical data point. Even as silver content per panel has declined, total silver demand has exploded. Because the reduction in silver per panel has been completely overwhelmed by the explosion in total panels manufactured. The world is installing solar panels at a pace that was considered impossible 5 years ago. China alone installed more solar capacity in 2024 than the entire world installed in any single year before 2020. India, Europe, the United States, and emerging markets are all accelerating solar installations simultaneously. Fewer grams per panel multiplied by exponentially more panels equals more total silver consumption. Every year, consistently. Here's the element of solar silver demand that separates it from every other commodity demand story in the market today. It is mandated, not speculative, not dependent on consumer preference, not subject to economic cycle fluctuations in the same way discretionary spending is. Mandated by governments, backed by law, with compliance deadlines and financial penalties for non-compliance. The European Union has committed to specific renewable energy percentage targets for electricity generation by 2030. Those targets require massive solar installation. The installations require silver. This is not optional. It is legally required. China's government has embedded solar installation targets into its 5-year plans, the country's primary economic planning documents. These targets are not suggestions. They are directives backed by state financing, regulatory frameworks, and enforcement mechanisms. The United States Inflation Reduction Act committed hundreds of billions of dollars to renewable energy incentives. Solar manufacturers and installers are building capacity based on those commitments. The silver demand that flows from that capacity build is contractually embedded in supply chains right now. India, Japan, South Korea, Australia, Brazil, major economies globally have made binding renewable energy commitments that translate directly into silver demand. Not eventually. Now, the silver for panels being installed this year was procured months ago through long-term supply contracts. This is the demand floor that makes solar silver consumption unique among commodity demand stories. Even in a global recession, governments do not repeal renewable energy mandates. Even when solar installation slows temporarily, the long-term trajectory is embedded in law and policy across every major economy globally. Mandated demand does not respond to spot price signals the way speculative demand does. Solar manufacturers need silver to meet government mandates. They will pay whatever price is necessary to secure supply. The only question is at what price new silver supply becomes economically viable to produce. Now, the central question. If solar silver demand is exploding at 400% growth in 5 years, backed by government mandates across every major economy, why is silver price action completely ignoring it? Same answer. Same mechanism. Same paper market dominance we have identified across every disconnect in our recent video series. Silver spot price is set by COMEX futures traders, not by solar panel manufacturers, not by government energy ministries, not by the Silver Institute demand analysts tracking these consumption numbers. COMEX paper traders respond to dollar movements, interest rate expectations, Federal Reserve language, equity market risk sentiment, short-term technical levels on silver futures charts. They are not watching solar installation statistics. They are not reading Silver Institute quarterly demand reports. They are not tracking government renewable energy mandate compliance deadlines. They are watching Bloomberg terminals for macroeconomic data releases. So solar silver demand can grow 400% in 5 years, backed by legally binding government mandates across every major economy, while the COMEX paper price sits flat. Because the paper traders setting that price are operating in a completely different information universe from the physical industrial buyers consuming the silver. This is not irrational behavior by either group. Paper traders are doing exactly what paper traders do, responding to macroeconomic signals with short-term positioning. Solar manufacturers are doing exactly what industrial buyers do, securing supply for long-term production commitments. The irrationality is in the market structure that allows these two groups to determine the same price through completely different mechanisms, and that structural irrationality always resolves, eventually, when physical supply constraints become impossible for paper traders to ignore. Here is the supply side of this equation that makes the solar demand story even more powerful. Silver mining supply is not growing at anything close to the pace of solar demand growth. Global silver mine production has been approximately flat to slightly declining for the past several years. New mine development takes 5 to 10 years from discovery to production. Existing mines face declining ore grades, meaning miners have to process more rock to extract the same amount of silver. Energy costs for mining have risen substantially. The economics of new silver mine development at current spot prices are marginal at best for many potential projects, which means the pipeline of new mine supply coming to market over the next 5 years is limited, already largely identified and largely priced into existing supply projections. Solar demand is growing 15 to 20% annually. Mine supply is growing 0 to 2% annually. The gap between demand growth and supply growth is widening every single year. This is not a temporary imbalance. It is a structural deficit that gets worse with every solar panel installed, every EV manufactured, every AI data center built. The industrial demand side of the silver equation is growing at a pace that mine supply cannot match, and has not been able to match for several years. The Silver Institute has documented a structural silver market deficit, where total demand exceeds total mine supply for multiple consecutive years. That deficit has been filled by above-ground inventory drawdowns. But above-ground inventories are finite. The COMEX vault drainage we track every week is a direct expression of those inventories being consumed. Every time a major commodity has experienced a structural demand surge that significantly outpaced supply growth, while price remained artificially suppressed by paper market dynamics, the eventual price adjustment has been dramatic. Copper in the early 2000s, lithium between 2020 and 2022, uranium from 2003 to 2007. Each of these commodities experienced extended periods where growing industrial demand was visible in physical market data, while paper price lagged. Each eventually saw explosive price moves when the structural supply deficit became impossible for paper markets to ignore. Silver's solar demand story is structurally similar to each of these historical episodes. Growing industrial demand backed by policy mandates, supply that cannot keep pace, paper price lagging physical reality, structural deficit accumulating. The historical precedents suggest the resolution is not gradual, it is rapid. And once paper markets begin pricing in a structural commodity deficit, they tend to overshoot in both speed and magnitude, relative to what physical fundamentals alone would suggest. The setup for silver today is arguably more powerful than any of those historical commodity case studies, because silver's solar demand driver is uniquely durable, backed by government mandates that cannot be repealed without massive political cost, and because silver's paper market suppression mechanism, the COMEX futures dominance, means the accumulated pressure is larger than it would be in a more physically anchored market. This is not financial advice. Always consult a qualified financial professional before making investment decisions. The solar-silver demand story is the most powerful long-term fundamental driver in the silver market today. It is not speculative. It is not based on sentiment. It is based on physics. Solar panels need silver. And policy. Governments have mandated solar installation at a scale that requires silver supply to grow dramatically. For long-term silver investors, this data environment could not be more supportive. The demand floor for silver is rising every year as solar installation expands. The supply ceiling is constrained by mine development economics. And the paper price has not yet reflected the structural reality that physical market participants are already navigating. For those considering entering the silver market, the solar demand story provides a fundamental anchor that makes silver uniquely different from purely speculative assets. You are not betting on sentiment. You are positioning ahead of a structural industrial demand story that is backed by law, physics, and the investment decisions of the world's largest economies. Physical silver allocated, in your possession or in a verifiable storage facility. The actual metal that solar manufacturers are competing to secure through long-term supply contracts right now. Dollar cost average. Build positions gradually. Let the structural fundamentals do what structural fundamentals always eventually do, reflect in price. We do not sell silver. We do not sell anything on this channel. Anyone claiming to be Stack AG and offering precious metals or investment products is a scammer. Block and report immediately. Solar silver demand has grown 400% in 5 years. Silver price action has ignored it completely. That gap between what the physical industrial market knows about solar silver consumption and what the COMEX paper market is pricing is the same structural disconnect we have identified across every layer of the silver market in our recent video series. COMEX vaults draining, Shanghai paying premiums, retail selling out, industrial demand at records, solar demand mandated by law across every major economy. 5 independent physical market signals, all saying the same thing. Silver is worth more than the paper price admits. The paper price will catch up, it always does. Because physical reality always wins over paper fiction in commodity markets, eventually. So you always have the complete picture before the mainstream does. Subscribe. Hit the bell. Share this with one investor.